All right, so just a few items. We're going to go over the midterm prep that's going to be upcoming. A little bit of background noise, kind of a loud fan, but I can't do much with that. Anyway, I wanted to kind of scope in, what exactly you're going to be required to study for the exam. We cover a lot of material, so I want to let you know, what you can be expected to know about and what is not quite as critical. Some of the things like, resumes, how to prepare a resume and stuff like that. It's good information, but it's not quite to the level of being testable. One thing you do want to know, though, there's going to be about 30-some questions, and they're going to be true or false, and multiple choice as well, and that's how we'll get it done. But when we talk about inflation, we've talked a little about the concept of inflation. What you really need to know about that is how it affects the purchasing power of your money. You still have $100 at the end of the day, 2 years from now, but what you can buy with that money is significantly different, and so that's what inflation has to do with that. And then also, there's a little bit of macroeconomics kind of thrown in as well, in terms of supply and demand. What makes prices go up, what makes prices go down, and generally it's going to be tied to demand. So if for example there's lower interest rates, that may stimulate demand. Increased supply of a product, that's probably going to decrease prices. Increased production by business, again, that's probably going to put out more supply, and lower demand by consumers. That's going to probably have a negative effect on prices, negative in terms of lower prices. So anyway, it's all supply and demand on those type of things. Other questions? I've actually got a copy of the test that I'm looking at, so it'll give us a chance to review it. Let me get back on page here. Let's see if we can get this thing to roll down. When we talk about the Fed, remember when we mentioned that a couple times in class, and you'll hear it referred to as the Fed, and what they're talking there is the Federal Reserve Bank and their kind of monetary process. They have monetary policy that affects interest rates. But if you're reading an article and it references something about the Fed, you do need to know that refers to the Federal Reserve Bank. Savings and investment choices. Generally, those things are going to be, affected by. Well, there's going to be lots of factors, as we talked about, driving interest rates up and down. Another thing you're going to want to look at in terms of investments is the liquidity aspects. And remember, real estate is something that's viewed as not being very liquid. It can take some time to get in and out of that, whereas, checking accounts, stocks, bonds, things like that, you can sell. Obviously, a checking account is better in that regard because, the price is going to be stable. Stocks and bonds, you can always sell them, but maybe not at the price you want. In anything in finance, when we're talking about, when you give up something for something else, that refers to opportunity costs. So know that concept. We talked a little about sectors in terms of where jobs are going and how technology can react to that or change that. It may make more sectors or different sectors have more potential employment. So those type of questions. When you go to employer, and they've got a number of benefits that are available to you, and they just sort of throw them out there and expect you to choose. That's called the cafeteria style plan. Tax exempt versus tax deferred. Obviously, something that's tax deferred is not quite as nice as tax exempt. Tax deferred means that you'll generally put off any loss or gain till some point off in the future, but taxes will have to be paid. Let me see some things about how to figure out the value of benefits. when it's say a tax deductible, or like let's say an employer gives you some sort of benefit that if you had to purchase it yourself would cost $1,000. How much is that worth to you? Well, you have to calculate the tax value. If you had to go out and pay it in tax out of pocket versus an employer giving it to you, obviously if the employer gives it to you, it wouldn't be reflected on your income, and so that would be beneficial. But you can do the calculation in terms of tax rates. Typically, most of these examples will be using like a 28% tax rate. So if you know how to make calculations with a tax rate, that's helpful. Federal tax deferred benefits, yeah, that only affects federal tax typically. More on employee benefits and their value in terms of what tax bracket you're in. So if somebody again gives you $400 worth of benefit, what is that? What is the cash value of that to you? Most Americans don't quite save enough. We know that. How to do a simple tax rate. If they say you're paying, $5,000 worth of taxes and your income was $50,000, well, that's 10% tax rate. So the numbers would be a little bit more complex, but basically, you know how to figure out a percentage. Expenses that when you're calculating gross income on taxes, remember the AGI discussion, adjusted gross income, and so you know what comes out of there, deductions, exemptions, exclusions, know which one is which. If you're getting a tax credit, that is a good thing. That's subtracted directly from the taxes you owe. What are capital gains? Say if you sell some tax or sell some stock for a profit, sell a house for a profit, that profit is considered capital gains. Again, back to the concept of liquidity. Liquidity is the ease of buying and selling things, and it can be quite difficult. If you need cash quickly, you would like to have that in a liquid account. So if you're in long-term investments and you want them to stay in long-term, you may not want to have that portion part of your emergency fund. More taxes. The difference between open-end and closed-end credit. Remember, closed-end credit would be like for a car loan, a house, something like that has definite terms to it, as opposed to like a credit card where it's open-ended credit. Remember the characteristics of a debit card. It automatically comes out of your account, immediately deducts. And also remember that the fraud provisions are not quite as strenuous as they are with a credit card. Remember also, if you co-sign a loan, what that entails, that you are probably the person that they're going to go to. If that loan goes into default, they won't necessarily go after the initial person because you've got unlimited liability on that loan, and so you as the co-signer will probably be the one to come after. If you do get denied credit, what should be your first step? And basic thing is to ask for that credit report to find out whether you're legitimately denied or whether there's a problem. Also, you have an entitlement as a consumer to have that credit report if you are denied. The concept of collateral on any kind of loan, if you have collateral, then the loan is considered secured, and that's a good thing because that will generally make the interest rate lower. In order to get tax-free not tax-free, but interest-free on credit cards. What do you need to do in terms of the balance? It needs to be paid off every month. So it has to get down to zero during the pay period or during the billing period to be considered. If you default on an automobile loan, what's going to happen? They're going to repossess the car. That is, they don't have to give you a notice. They don't have to say anything. The laws are quite lenient in terms of repossession, and that accounts for the pretty reasonable interest rates you can get on cars, is because they present pretty good collateral to the lender. We talked about bankruptcies, so we've got Chapter 7, Chapter 13. Remember, Chapter 7 is a straight bankruptcy. Everything's turned over, and Chapter 13 is like a wage earner type plan. If you get into Chapter 7, you have to come up with a list of assets and basically turn that over to the court, and they decide what's going to happen. Small claims court issues. If you go to small claims court, what's the feature of that? Basically, it's they try and maintain a lower cost, so there are no lawyers involved in that. When we're talking about service contracts, the problem with service contracts is they're expensive and they have a lot of exclusions. So be careful. They often will try and sell you a service contract, but you really gotta track down the details and maybe talk to other people who've had that experience. They're not all bad, but generally in terms of a test question between me and the authors, that as a categorical statement, generally they're expensive and have a lot of exclusions. Remember when I talked about arbitration and mediation? Mediation is, for most purposes, kind of a joke, because either party can just walk away. But arbitration, and they'll often say binding arbitration, which is kind of redundant. Arbitration is binding, and that's where you have a dispute. The two parties get together, and then a third party hears it, and that decision under arbitration is final. Class action lawsuits, what do they deal with? A lot of people with the same problem. Again, it's for a mass consumer group typically, where the lawyer costs for going individually would just be prohibitive. When we're talking in housing, ownership of an individual housing unit, typically when they're talking about that, they're talking about a condominium as opposed to a apartment where you're just renting it, or a cooperative where that's a different format. In a condo, you actually own the interior of that condominium, so from the paint inward, and then you pay a monthly fee for the other common yard, common areas. You do not own that. Earnest money. What's the point of earnest money? Earnest money is when you're having a transaction, like say a real estate transaction, you would put down money to show good faith. So you may be requested to put down $5,000. It's sort of a down payment, but actually it's held in escrow. And if there is a problem, there's a good chance you'll be able to get that back. But it's under the terms of the escrow. So anyway, that's a very, very common practice. Anyway, that's about it. The midterm, if you have more questions, we'll talk about it, later. But I wanted to kind of give you a heads up of just what to expect and how to calibrate your study.